Welcome to Market Monitor. Today is the middle of April, which means that the March stats for 2023 have just come in. So we're going to be reviewing Q1 as a whole, as well as March itself year over year for our local market here in and around Hudson County, mainly focusing on Hoboken, Jersey City neighborhoods like downtown and the Heights, and Union City and Weehawken. Let's dive right in. All right, so here are the most interesting stats going on. Let's start with Hoboken, my hood here. So Hoboken Q1 wrapping up for 2023. Some of the stats we have here are divided between single family homes and the condo co-op market. Well, there's not much co-op market in Hoboken, but just keep in mind that none of these really include 2 to 4 families. We're just the stuff that we focus on here are single families and then those condos. So look at these year-to-date over numbers. One thing I want to just show you here is when we flip back and forth between Q1 and then the monthly reports, these numbers can get flip-flopped. So just pay attention to that. So sales volume or number of sales for single family homes tripled actually in the last year, which is awesome. Sales volume itself went up 155%. Those median and average sale prices actually went down, which is an interesting thing because you look around here and single family homes seem like obviously some of the most expensive stuff on the market. And quite often it can be. I think a lot of this has to do, the median sales price going from 2 million down to 1.7, 1.8 has mostly to do with the types of properties that we're selling. I think a lot of the things that command a higher price, especially in the single family market, either have more bedrooms. To get over that $2 million mark, you need at least three bedrooms, and or it needs to be really nicely recently renovated. So I think with a lot of those 12, we probably had older housing stock and a combination of older housing stock, and then quite a few of the little single family townhomes that are in the Willow Terrace neighborhood that go for usually less than $1 million. There's a couple that have been over $1 million, but most of those are below. So that's kind of weighted down those averages there a little bit, or brought that average price down. But something to keep in mind there. Average days on market actually went up to almost 2 months here. Number of contracts down, actually cut in half, 50% lower. And the number of new listings about the same, 15 compared to 17 last year. So let's look at the condos, which is, the heftier part of the market. I mean, just look at that first number there. Number of sales went down from over 200 last year to below 100 this year. So just an extreme inventory crunch there, down 56%. Sales volume down almost 60%. Median sales price actually went up a little bit there by 4.5%. And the average sale price going down. I like to look at median a little bit more. I think a lot of those sale prices there, especially in Hoboken, were probably fluffed up a little bit last year because of a lot of the really new, nice and expensive condos that came out of the Wonderlofts building. So I think median is a little bit more interesting and probably a little bit more accurate. So decent amount of appreciation there. Home prices really not falling in Hoboken despite higher interest rates. I think it's just kind of a battle here. I wouldn't want to be a renter renewing their lease in the last year or two because you're kind of caught between a rock and a hard place, right? I mean, your rent's probably going up, hopefully not too much, but a lot of people are really getting gouged. But also it's just more expensive to borrow money and buy something as well, especially in an inventory crunch like this. Number of new contracts down 50% or 49 here. And the number of new listings almost cut in half from 400 down to just over 200. Just another way of looking at Hoboken here. So under contract, 65 total properties here for the month of March, which is down 55% from March last year. Average price unchanged, median price up 12% of those ones that are under contract. And then units sold 41 in March, which is down 53%. Average sale price unchanged, with median sales price actually up 9% from last March. So overall breakdown, this is a mix of all the different kinds of housing. for March. Days on market, roughly unchanged, a slight uptick there. Percent of asking price. So here, keep in mind that these are reversed from the quarters. So March is on, or this year is on the left. Percent of asking price overall, over 100%, pretty crazy. Average sold price, pretty much unchanged there, but number of new contracts down 54% and number of new listings down 40%. All right, so taking a look at the houses here in March, not many sales. Number of contracts here is only 3, new listings 8. Percent of asking price went down, as well as the average sale price. I mean, that's obviously going to be just weighted between those few houses that actually sold here last month in March. But average days on market went up quite a bit, and there's a little bit of room there for negotiating between last year they were at 100, this year down 3%. So of those that sold, I think there were 12. A little bit of negotiating room there, but not by much. Condos and co-ops, or condos here in Hoboken, average days on market went down slightly from 33 to 25. Percent of asking price holding steady, actually 100 up to 101. So your average apartment there is actually being bid over by a little bit, despite the average sale price actually going down a little bit. But keep in mind what I said a minute ago. A lot of that stuff from last year was from Wonderloft. So not a big surprise that the average sale price went down there. But look at that, number of new contracts and listings down by 54 and 42% respectively. Inventory crunch here, guys. So this blue line is this year and or the past 12 months, and then the gray line, this is just inventory the year before that. So roughly following the same trend, starting off with more inventory, a little bit of uptick here at the beginning of fall, and then kind of slowly dropping here with a slight uptick. Well, if you look at this 12 months, this isn't ending in December. So we see this natural incline here in the spring, another little bump, not quite as high in the fall, but overall the trends are basically the same. Those shapes are largely the same, seeing where and when inventory comes out this past year compared to the year before, but just look at how much lower that blue line is. Just a lot less inventory to choose from here in the past 12 months than there was the year previous. Contracts by price range. Let's look at where the opportunities are. Majority, depending on which year you're in. So this is the bluish line is last year, and the grayish line is the year before. Contracts and listings by price range, very heavy in the 700 to $1 million price range. So national average right now of single family home price is about $400,000. Obviously, we're a bit of a unique area, being New York Metro here. So our average sale price is, depending on the month and the year, like we just saw, about 800,000 here for this past month and this past quarter. So not surprising that most of the contracts and most of the listings are in this price range here of 700,000 to $1 million. Followed up by a decent amount in that section below that, 500,000 to 700,000. So if you can find it, if the inventory actually comes on, and I will say, looking into the spring and summer, there will be a slight increase in inventory. This is when people prefer to move, and just historically looking back, this is the type of year when, or this is the time of year when more listings come out. But I don't expect, and no one I'm talking to is expecting there to be like a huge surge of inventory. It's going to trickle in. So if you are in this money spot here around Hoboken, 500 to $1 million, I would say now is the time to be prepared, especially if you've been in the market before and you were priced out or something happened and you didn't buy. You're back in the market here. Make sure you have your pre-approval ready to go. And I would take that a step further and get a full credit underwriting approval for you as a buyer. It just looks better. It's going to help your offer stand out more. And it basically is just property contingent. So as long as the building checks out, like you as a buyer completely already underwritten, and it just makes your hand that much better, especially in the situation around here where, multiple offer scenarios in that sweet spot of the price range is, I'm not going to say not unheard of, but maybe even likely. So if you want to find out more about that, let's talk for sure. It's pretty easy. It's just like a pre-approval process, but it's just an extra conversation, making sure that your lender is going through that extra step. So please ask me about that offline if you're curious about it. But bottom line is, if you're a buyer, get ready now if you're not already. All right, let's switch over to Jersey City. So this is all neighborhoods or boroughs, whatever you want to call them, of Jersey City included here for the quarterly reporting. So keep in mind, we're switching back and forth. The most recent year or recent quarter in this year is on the right-hand side now. But look, I mean, sales volume down 53%. Number of sales down 53%. Sales volume down 50%. And that median sales price holding steady, average sale price up a little bit, which is great. Just as far as property values go, if you own something around there, good for you. Average days on market, absolutely the same across the board. Number of contracts down almost 30%, and number of new listings down 17%. So not quite as bad of an inventory crunch as Hoboken, Jersey City as a whole, but still inventory and number of contracts down and down for single family houses there. For condos and co-ops, I can only really think of one co-op building in Jersey City, maybe two, but anyway, so we're focusing here on the condos and townhomes. Anything with an HOA or a community there, pretty much down across the board as well. Number of sales and sales volume down by a quarter. Median and average sale price pretty much holding steady. Average days on market holding steady as well. But number of new contracts down almost 30%, and number of new listings down 30.5%. Let's look at downtown here, just kind of overall. 45% decrease in sales compared to March last year. 18.2% decrease in average days on market. Almost 5% decrease in average price. Not too bad, but in median sales price, only a almost 2% decrease for the month of March in downtown. So overall, I like to actually split downtown up quite a bit here because it's a little bit more even between single family houses and condos. But as you can see, days on market actually up here because we're switching back. Look, March, most recent here is going to be on the left-hand side. So average days on market for houses actually up 65%. Percent of asking price, you get quite a bit of room to play there. Last year was at 95. Now average or percent of asking price that was received is actually 82. Number of sales, though, I mean, basically down 3 to 1, from 3 to 1, just for that month of March there. So that one place that sold $700,000 compared to the average of those three at $1.4 million last year. But yeah, single family homes here. Overall, I would say the housing stock in downtown, especially if you think more towards like Parsimus Cove and Hamilton Park area, there's a lot of smaller, like half addresses that are single family homes. So like, 205 and a half 3rd Street and things like that. They are smaller, but they are indeed single family homes. The lots are just smaller. Anyway, there are a bit more opportunities there than let's say Hoboken to actually find a real single family house for sale, but apparently not in March. Only one place sold compared to 3 last year. Anyway, let's get back to this number of contracts down by half from 4 to 2. Number of new listings down extremely from 11 down to 3, or down to 3. Switching over to condos, average days on market down 20%. Percent of asking price here, pretty much the same, 99%. Average sale price holding the same. Number of sales, though, down 44%. Number of contracts down 37%, and number of new listings down almost 40% as well. Where is this inventory, guys? We need it. Heights, a little bit of a different story than downtown. Let's dive into this. Decrease in sales, 26%. Increase in days on market, and then the average and median sales price pretty much holding steady for those things that are closing. But let's take a look. Let's see. Number of sales on houses down 66% from 6 down to 2. Number of contracts the same, 3 to 3, but number of new listings in March down by 10, well, 77% from 13 down to 3. Percent of asking price, well, considering 2 sales to 6, I wouldn't weight these too heavily. I've seen, for the most part, land values for places that are getting developed actually going up. I think this is just very specific on these 2 that sold that were less than the average last year. Condos, though, I think a lot of this pricing is, well, let's look at the numbers. Average days on market up, percent of asking price down a little bit, but down for sure. Average sold price, largely the same. Number of sales, though, down 20%. Number of contracts relatively the same, and number of new listings down. So I would love it, and we just don't have it right now, to see what the quarter, so this is March. I would love to see what the quarter, Q1 of this year compared to Q1 of last year would be just for the Heights. Because I feel like a lot of the pricing, especially on the new developments in the Heights, and I've been saying this for a while, like this is a good time to get in because the inventory there is quite a bit higher, especially for new development. And a lot of that stuff, especially at the beginning of this year and late last year, the pricing, the reason there was a lot of inventory and places weren't really selling as much as they were before is because as interest rates went up and pricing kept going up, it was pricing a lot of people out. And really the price in the Heights, at least until now and for the slight foreseeable future, is really, the further you are east in the Heights, the more expensive it's going to be because the closer you are to Hoboken, the closer you are to transportation, and that's where most of the new restaurants and everything are being developed and put in and opened. But a lot of the price and a lot of the inventory that's come on, I would say in the past 6 months, is actually kind of on the western half, like maybe central and west, kind of on the western slope area or the area leading up to the western slope. And a lot of those sale prices were based off of the things that were selling on the eastern part. So it's a slightly less desirable area. The lots, especially from the western slope, can drop off or get a little weird as far as topography. And so we ended up seeing quite a few either gut renovated places or new construction places that were priced off of, but twofold, off of the east side of the Heights prices, and then also priced off of what sales have been doing in the Heights up until interest rates were doubled in 1 year. So a lot of that stuff stuck around. There was a lot of negotiating available for buyers that are looking around there, and that's still the case. So if you are looking for a place, let's say in downtown Jersey City or Hoboken, and you're getting priced out and you're getting fed up, I would really recommend reconsidering or considering in the first place the Heights, because you can get a lot for your money compared to what you could just in Hoboken or downtown Jersey City. And there's a lot more opportunities as a buyer, especially as a frustrated buyer, to maybe find something that's a bit newer, more renovated, and have some room for negotiation, especially if those prices are still sticky from before and the developers aren't really seeing the light and coming down. So that's those are my thoughts there. We're also seeing, especially in the last couple months, when the inventory is high, I mean, there's a lag. Obviously, developers have to buy a lot, and then they got to get permitting and go through all of the things that are involved with getting permits to tear down the building and then build it up. So there's been a lag in development where we're seeing a lot in the Heights. A lot of the inventory was just kind of sticking around because it wasn't selling, but there was kind of a dip here towards the end of the year when interest rates were really high and developers were not buying those properties because their margins were getting so thin. The properties are getting more expensive. It was getting more expensive to borrow that money if they were borrowing money to buy the house. And then the costs of material and labor were actually increasing as well. So their margins were just getting scrunched. So I'm hoping that as interest rates kind of level out and come down a little bit, maybe housing prices for those lots will stabilize a bit as well. I mean, we look around with the stats that we've been going over, inventory is a huge problem all over the place. So any new inventory that we can add to the market is a good thing. So yeah, that's my rant on the Heights and inventory. I'm just hoping to see a lot more with, you know, maybe not quite the level of high-end finishes on most of them that we have been seeing over the past couple of years. But I mean, brand new, very affordable, livable, nice new construction or gut renovated places to come on the market in that very affordable price range for the Heights. I would say between, you know, 600 or 650 and like 800. Not above like 850, 950, things like that, where the pricing was going and then just was petering out. So anyway, that's enough about the Heights. Let's go to Journal Square. Still very much a speculative market, even though there's a lot of development going on there. I mean, I look pretty often, a lot of people in my office do as well. If you draw a circle right around Journal Square Path Station, there is hardly anything that comes to market ever for sale because a lot of the developers bought that stuff years ago and are just holding on to it to develop it or have started developing it. But I mean, it's going to be and will be a great investment for those people. So this is where some opportunities are, especially if you can buy and hold, and especially if you can get like outside of maybe a quarter to half mile radius of the Journal Square Path Station. And I'm talking about the area around Lincoln Park, McGinley Square, and then actually north of 139, like I guess kind of the southern part, the southern couple streets of the Heights are all like very walkable to the path, like within a mile, maybe a mile and a half tops. I mean, those are the areas where we're seeing, or where I am predicting that it's going to be really good buy and hold area where rents are going to keep going up, property value is going to keep going up. So anyway, this stuff can be, you know, hard to see when you look at it month over month, but the appreciation is there, and the writing is on the wall for this the Heights, I'm sorry, Journal Square to continue to be a place where the action is happening, so to speak. So 32% decrease in sales compared to March last year, 22% increase in average sale price, 31.3% increase in median sales price, but also a huge increase in days on market. So let's kind of dive in here and see what's going on. So overall, days on market has gone up, percent of asking price at the same 99, average sold price up. There you go. So this is overall, this is the houses and the condos, even though there weren't very many houses for sale. Number of sales down by a third, number of new contracts down by a third, and number of new listings down by almost a half. So houses, only 2 sales compared to 4 in March last year. But look at that average sale price up quite a bit to over $1 million, where we were at 755 last year. Percent of asking price received, a little bit of play there from 99 down to 94 this year. Yeah, number of new contracts and listed, well, new contracts actually up from 5 to 6, and number of new listings down by 1 from 7 to 6. Condos, days on market up significantly. Percent of asking price received, 99 compared to 98. I might challenge that a little bit. I've seen quite a few condos. Maybe they like got pulled off the market and then relisted at a different price when there was a price improvement. But I think there was a lot of properties there, especially condos, that were probably priced a little bit too high in a speculative market when the interest rates were lower. I mean, that was a huge area for people to buy like a condo or maybe a small building with condos in it and have it rented out and have it as an income property. But when interest rates went up to above 7 last year, we saw a lot of those investment properties sit around for a while or not sell. So the things that actually sold for 99% of their asking price, I think a lot of those probably had a price adjustment, and a lot of things that were overpriced just expired and never sold and never made it into the statistics. So something to keep in mind. But the things that did sell here last month, that average sale price went up almost $100,000 from 388 to 480. But that was 19 sales compared to 27. Number of new contracts down 42%, and number of new listings down almost 50%. Union City, all right, last couple here. Single family home sales, pretty much the same. Sales volume, pretty much the same. Median price and average price, pretty much the same. I mean, but Union City, as I've been talking about this before, is pretty insulated. There's just a lot of the appreciation is very slow there, but the rental laws and development laws are much more strict than, say, a place like Jersey City. And now that the taxes are in some cases more affordable than Jersey City, this is not surprising to see not a lot of change around Union City, except look at that. Average days on market up, maybe by 10, 13, 14 days. But the number of contracts down 63%, pretty crazy. A number of new listings, pretty much the same, I guess. But the number of contracts there, 11 last March to for this March for the single family homes is pretty crazy crunch there, or pretty significant delta. Condos, let's see what's interesting here. Median and average sale price up, 20 to 24%, which is pretty great. Days on market pretty much unchanged, but again, far less volume in the number of contracts and pretty significantly less number of new listings there as well. Weehawken, I mean, this is an area where not a lot has been selling. I mean, 18 transactions between single family houses and condos in all of Q1 this year. I mean, that's pretty crazy. If you have a house in Weehawken and you're thinking about moving, call me and let's talk about it, because if you can get your house on the market or your apartment on the market soon, I mean, the inventory crunch there is real and stuff is selling pretty fast. And before I get too into the weeds and before this gets way too long, I will wrap it up here. But these Q1 stats, these monthly stats that come out, they are available to everyone, and I send these out every month. Quarterlies I send out with the monthly ones when they're available here about the middle of, April or the first month after that quarter. So if you don't have access already, if I haven't sent this to you yet, please let me know. Give me your email address and I will forward this right over to you. All of this stuff is available for every single town in New Jersey. And also there's a link to New York and the tri-state area. So if you're looking at any of those areas, that is accessible to you in that very same link. So give me a shout if you want access to that. Thank you so much for tuning in to this episode of Market Monitor. I am Brian. Take care, everybody, and I will see you around next time.